In this video, a firm trader shares a risk management strategy he developed to increase profits in his trade of the month. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, a proprietary trading firm located in Midtown Manhattan, and I'm also the author of the trading classic One Good Trade and the Playbook. In this video, see a detailed step-by-step explanation of a technical analysis IPO trade in Peloton that resulted in the best trade of the month for a firm trader. And most importantly, the risk management technique he developed to smartly increase risk in this trade to boost his trading profits.
So this is the trade I made on Peloton on the second day it IPO'd. So it's a break below the bottom of the price range, the IPO price range. So some fundamentals. So the price range for Peloton was $26 to $29. Its offer price was $29. Had a 40 million share offering, and the underwriters were Goldman Sachs and JP Morgan. If you don't know, Peloton sells exercise bikes and treadmills and streams fitness classes to those devices through a touchscreen included with the machines. It commands a premium price of thousands of dollars for the machines and $40 a month for a subscription to its classes, over 40% more than it costs to reduce both the hardware and content. While gross margins top 40% for both its product and subscription services, Peloton's net losses grew at an even greater rate than its revenue in 2019, thanks to a surge in spending on sales and marketing, as well as general and administrative costs. Its net loss in 2019 was $195.6 million, up from $47.9 million in 2018 and $71.1 million in 2017. So they're not making money.
And they're losing more money.
And they're losing more money and spending more money.
But they're growing.
They're growing.
They're growing hot in a sector with a lot of upside. Lots of people talking about Peloton.
That's right. So here are some recent weak failed IPOs. So these were all weak and failed differently in their own way. So we had Smile Direct Club, which had its IPO on September 11th. It had an offering price of $23 and a range of $19 to $22. It opened up in the middle of the range, broke the low end of its range on the first day, tried to bounce and it failed. We had D-Dog, had its IPO on September 18th, priced at $27 and had a range of $24 to $26. It opened up too high at a price of $41 and trended down to $30 before it found some support.
Why are we adding these charts? Why are we talking about these other stocks that are not Peloton, that are not in Peloton's sector? Why are we talking about this?
There's been a theme of these companies having their initial public offering and failing. So that's going to contribute to our thesis and our conviction for this trade here.
The theme lately is IPOs have been weak and failing.
Exactly.
That goes into our decision-making process for the trade you're going to run through.
100%.
Got it.
And then Work was from a while ago. It was a direct listing, which was priced at $26. It opened up too high at $42. It's been in a downtrend since it listed in June. It eventually broke its offering price of $26 and continued to trend lower. So this is Peloton on day one of the IPO. You can notice that it definitely looks a little crazy and people are getting caught on the wrong side, but if you take a step back from that price action, you could see that it makes a series of lower highs, and then eventually it holds clean below 27, which was the opening price, and VWAP after a series of these lower highs. So that's a great short setup, and I know a lot of traders got chopped up on this, but all you had to do was step back and really just take in what was going on, and there was a great trade there. And then eventually it broke the low end of its IPO price range, and it's really its last support level. And it closed below 26. So you can see it a lot cleaner on the 15-minute chart. It fails to hold above the opening print. You can see these wicks here. Eventually it can't get above 27 and it fails.
The opening print is $2 below the IPO price.
That's correct.
Very weak open then.
Yes, that's not good. That's not a good sign.
Yeah, so its technical support is the IPO price. When we're opening up below the IPO price, we're broken, technically. We're searching for an area of support. And so you are not only pointing out a resistance area at 27, but 27 is 2 points below the IPO price. It's almost like this thing never had a chance to be good.
So day 2 preparation. Now this was setting up to be one of my favorite trades, one of my A+ trades, one of the trades that I've made the most money on so far. So after the close, on my commute home, I began preparing and planning for how I would trade Peloton on day 2. I knew this could be a massive trade, even better than the play on day 1. This was setting up to be an A+ trade. I thought of all the different scenarios we could possibly see on day 2, worst case and best case. I visualized the trade that would be the most profitable. I went to sleep that night excited for the potential opportunity that was to come the following morning. On my commute the day of the trade, I rehearsed what I needed to see to size in. I was just very focused and ready that day. I also kept in the back of my head that it might not work out and I needed to stick to the detailed plans that I developed for myself.
Notice how this sounds a lot like what we heard from Ryan, the experienced options trader who had his best trade ever. Daydreaming, visualizing, thinking about, planning for, thinking through, rehearsing a big trade that is about to come. Preparing yourself to win. Justin is, again, walking through the same type of process that we saw with Ryan.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So I came into the office with a positive mindset, knowing that I planned fully and I was prepared for the trade. My executions would be seamless and I would not even need to think. I was ready to trade this setup like a robot. I knew what I needed to see and all I had to do was hit the keys. So on day 2, the first step of this trade is the most important part of the trade. Off the open, Peloton opened up at 26 and there was a huge buyer soaking the bid for about 20 to 30 seconds. So just buying all he can at 26, trying to support that low end of the price range. He fails to hold it and I hit in short. This 25.75 area supports for about 3 minutes and when it drops, I add to my position. So right then and there, you get an immediate 1-point move from 26 to 25 and I cover a small portion, my risk is covered. So 24.60 holds the bid and I cover some. Then finally it moves down to 24 and I take some covers. Now it rebids and holds above 24 for 5 minutes. You see this highlighted area here? And I cover most of my position and I'm just left with a small swing position. It was odd that it got below 24, did a lot of volume, and then rebid and held it. And it held it for a little more than 5 minutes. And that's just a clear sign to take profits. So what I did with my swing was it started to hold 25 and I just cut my position. And then it ended up closing above 25 that day. So these are day 1 executions. I was getting caught up on these wicks. I eventually left the desk, came back with a clear head, looked at my 15-minute chart, saw that I was finally holding below 27, couldn't get back above 27, put the position back on, even bigger than I had gotten all day, and then it worked. I actually held a small portion of it on day 1, and I came with that on day 2. So I came into the day with a few hundred shares. So what could I have done better? I really should have set up a meeting with our risk manager, Carlton. I should have sat down with him, explained the setup, and requested more risk. Each month, there are a very small number of trades that offer an opportunity like this one. When you see your A+ trade setting up, you need to be prepared and ready to risk more than 50% of your stop on it. You need to take full advantage of these few and far opportunities, and that's kind of what makes the difference between a good trader and a really great trader. So after this trade, I created a report to submit to my risk manager when there is an outlying opportunity that I would like to take additional risk on. And I'll show you that on the next slide here.
During the monthly meeting that we have with your team and you, we talked about, hey, how do you make more in this opportunity? You know, this is an A++ trade. And how do we get you to be able to make more in this particular trade? And that it doesn't make sense for this to be normal risk. This is a special opportunity. This is a special risk opportunity. And for a special risk opportunity, we need to treat it differently. Because risk management is not just about how much you might lose on a particular trade. Risk management is not just about what would happen if it doesn't work out. That is an important part of risk management. But when you have a risk reward that is asymmetrical, when the reward is so high, relative to the risk, you need to be thinking about taking on more risk. And there's actually too much risk if you're identifying your A++ trades to be trading them like a B trade or even an A trade. There's too much risk in your overall trading if you are not putting on more risk for these special opportunities, because the reward is so high. It's too risky. And so we started having conversations about this, and this is your solution to this. This is us saying, hey, we've got to get this right because we want to make sure we turn this trade. You know, this was one of your better trades of the month, if not your best trade of the month. Was it your best trade of the month?
Yeah, it was.
Okay, so your best trade of the month was X. How do we get your best trade of the month to be a multiple of X? How do we do that within guardrails? And how do we do that, you know, with a process that helps you to trade bigger in the right way? Because lots of people go about trading bigger poorly. They get too big too fast and they take a huge couple of steps back. Or they're not systematic about what they're going to put on more risk with. They just put more risk on too many things. And so this is a systematic way for you to identify special risk opportunities and put on special risk so that you're growing as a trader. So what did you come up with?
Yeah, so this is something that I would fill out and then send to Carlton, and then we could sit down and talk about it and agree on a certain amount of risk. So I came up with this report, and it has a trade thesis, the risks that I would like, multiple time frame technical analysis of the trade, contributing fundamentals for the trade, the intraday fundamentals, so ATR, AVOL, short interest, institutional ownership, and for instance of an IPO, you'd have the price range, the underwriters, all those things that contribute to that. Similar setups and recent trade examples and the multiple time frames for those. Best intraday trading scenarios, so you can put a different amount of scenarios there of all different things that you think could happen, and then worst case scenarios if the trade goes against you. Come up with like a conclusion here, quick synopsis of what you wrote, and then submit that to Carlton and have a sit down with him and talk about that. Because really, there's only a few trades a month that you'd get excited about. And if you're excited about a trade, it's probably an outlying opportunity that you want to take advantage of.
Yeah, we're not here to put on, with your best trades, 1,000, 2,000 shares. You're not here for that. Now, I'm not saying that tomorrow we should get you to 100,000 shares, but for your best trades, that's what you want to be thinking about. How do I put on 100,000 shares in my A++ special opportunity trades? How am I going to get to that point? That's what we're here for. With those best trades, you need to be putting on 100,000 shares in a stock like this. You need to be thinking about making 6+ figures in a trade like this, in an opportunity like this, and how you go about doing that. So this is a good first step towards doing that.
So you said that like you wanted to like put on 50% of your daily stops. So like, does that mean that on your first entry that you're going to put on 50% risk, or does that mean that by the time that you have like full size, that you'll be at that risk level?
Well, it depends on what you're seeing intraday, I think. Depends on the setup. So, for instance, this broke 26, and that's where I got my biggest ad, and I risked to the height of the day, which was around 26.10. So at that point, I was risking about 30% of my day, and then with the ads on, then I was risking the full 50% of my day. So the whole trade together.
Okay. Gotcha.
And then as the trade goes on and it starts to work, you adjust your stops, and you're no longer risking 50% of your day on it.
Gotcha.
But your max loss for the trade, 50%.
Yeah, I do have a question about not this trade specifically, but about playbooks surrounding an A+ setup. So two questions. The first would be, do you have the opposite scenario listed where this particularly was weak? There were lower highs, closing the bottom of the range for the day. Would you have an IPO very strong on its day one, and would that be included in the same playbook setup, just for the opposite side of the trade?
Is the question, what would I do if it was strong? Like a playbook for a strong IPO?
In your archives, in your notes, where you're taking note of past times where this has gone in your favor, and this setup has worked out well, and that's why you consider it an A+ setup. Do you have the opposite side where an IPO is strong on day one, and you apply the same criteria, but in the opposite direction?
Yeah, my best trade ever was in a strong IPO. I have a couple long playbook setups for IPOs.
My follow-up to this was, in terms of an A+ setup, how many reps do you try to get of a certain trade or a certain setup before you start to increase your position size? That way you know it is the sound setup rather than just an outlier, just luck that it happened to go in your direction.
Yeah, so basically what I look for is I tag all these types of trades in my trader view, and then I'll look at that tag and see how it's been doing. So on my higher time frame technical trades, at the end of the month, I'll see how they've been doing, and then I'll look at my IPO trades, see how they've been doing. And if your average loss is a lot smaller than your average winning trade, and your average winning trade is 5 times bigger than your average losing trade, that's something that you want to size up if you have the stats and you have a significant amount of trades to determine that sample size is accurate.
Now it's your turn. Which effective trading technique from this video will you try next? Are you going to add risk to your best trading opportunities, or experiment with IPO technical analysis trades? Let us know by leaving a comment below right now.